The fourth quarter continues to be a positive one for gold producers, with Allied Gold on Thursday seeing a positive response from the market for their results. Of course, the company also managed to post the results on a day where gold futures managed to cross the $3,100 mark for the first time. So that certainly plays a role in investor sentiment. Guys, we're nearing the end of the line for fourth quarter results from producer folks. We're talking Allied Gold, we're talking earnings. Let's dive in. Allied Gold in the fourth quarter recorded revenue of $171 million, which surprisingly was actually down on a year-over-year basis from $180 million in the fourth quarter of 2023. This revenue figure was off the back of 65,000 ounces of gold being sold, down from 93,000 ounces in the year-ago period, at an average figure of $26.34 an ounce as compared to $19.28 an ounce in the year-ago period. The decline in sales year-over-year was blamed on administrative delays in Mali, which delayed the export of nearly 49,000 ounces of gold. Net income for the quarter came out to a loss of $8 million, or 3 cents per share, as compared to net income of $13.3 million, or 2 cents per share in the year-ago period. A major impact here was over $38 million in current and deferred income tax expenses, which negatively impacted the quarter. On an adjusted basis, net earnings totaled $9.5 million, or 3 cents per share, compared to an adjusted net loss of $4.6 million, or 2 cents per share in the fourth quarter of 2023. Adjusted EBITDA totaled out at $47.3 million for the quarter. Net cash generated from operating activities, meanwhile, totaled $49.6 million versus an outflow of $9.2 million last year. For the full fiscal year, revenue came in at $730 million, an improvement over the $656 million reported in 2023. Gold sales were down on a year-over-year basis, again due to the delay in Mali, with sales totaling 313,000 ounces versus 343,000 ounces last year. Those ounces on average recorded revenue of $2,327 each versus $1,908 last year. Allied Gold for 2024 recorded a net loss of $120 million, or 43 cents per share, versus a loss of $192 million, or $1.03 per share in 2023. The biggest line item here for both years was the line item designated as other losses, which seems sort of like a black box within the statement, with the line recording losses of $125 million in 2024 and $153 million in 2023. On an adjusted basis, Allied recorded positive net income of $36 million, or 14 cents per share in 2024, versus an adjusted net loss of $12.6 million, or 7 cents per share last year. Adjusted EBITDA for the year, meanwhile, amounted to $186 million. Net cash generated from operating activities improved year-over-year, from $20 million to $110 million. Allied Gold ended the year with cash and cash equivalents of $225 million, a figure which they say would have been $130 million higher had certain gold sales closed within the quarter. So, how did Allied fare in terms of production? Well, fourth quarter production totaled just under 100,000 ounces, with those ounces coming from a total of 3 producing mines, 2 in the Ivory Coast and 1 in Mali. Production was close to the midpoint of guidance, which called for between 98 and 102,000 ounces to be produced within the quarter. The figure also represents the highest level of quarterly production ever achieved by Allied Gold. Cash costs during the quarter came in at $15.89 an ounce, a 14% increase over the $13.98 per ounce figure reported in the fourth quarter of 2023. Adjusted all-in sustaining costs, meanwhile, climbed from $15.93 an ounce to $17.08 an ounce on a year-over-year basis, a 7% increase. For the full fiscal year, production totaled 358,000 ounces, a 4% improvement over the 344,000 ounces produced in 2023, yet far short of guidance that called for production to be in a range of 375,000 to 400,000 ounces. In terms of costing, cash costs rose from $14.18 to $14.84 per ounce in 2024, while adjusted all-in sustaining costs totaled $16.99 an ounce, as compared to $15.69 an ounce in 2023. Guidance had called for mine site all-in sustaining costs of $1,400 an ounce, a figure which none of the 3 operating mines came anywhere near achieving. So how are things shaping up for 2025? Well, Allied is maintaining their production guidance range of 375,000 to 400,000 ounces for the year. That being said, production levels in the fourth quarter of 2024 made this target seem possible, versus their performance earlier this year. Production is expected to be back half weighted again in 2025 as a result of mine sequencing. The company is expecting production levels in Q4 this year to be 56% higher than production levels in Q1. That gives you a sense of how dramatically production is expected to vary. Costing guidance, meanwhile, is expecting mine site level AISC to be a more realistic $1,690 to $1,790 an ounce, meaning these costs are expected to stay roughly flat year over year. And in terms of capital expenditures, $25 million is expected to be spent at Agbaou related to production stripping in 2025, while $60 million will be spent at Bonikro for the same purpose. The spend on stripping this year is expected to lead to robust free cash flow in future years. Outside of their producing assets, construction at Kurmuk is expected to remain on track and on budget, with the new mine expected to come online in mid-2026, contributing 175,000 ounces of production to Allied's profile next year. Expansion at Sadiola also remains on track, with $70 million still required to be spent under the first phase of expansion that is expected to be completed by Q4 of 2025. The company is also expecting to list on the NYSE this year. An introductory call has reportedly been held to preview the listing, while the symbol AAUC has been reserved for the company. Listing is currently expected to occur in the third quarter of this year. All right, so let's wrap it up. Did Allied meet their guidance for 2024? Not even remotely. But they're still moving forward and still generating cash from their operations. They seem to be in a bit of a transition period right now, with two major projects currently in the works, which means, well, they're progressing. Maybe not exactly as investors would like, but they're getting there. And by this time next year, they'll be on the cusp of transforming their production profile, nearly doubling their annual output of gold. As they say, Rome wasn't built in a day. All right, everybody, thanks for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. Also, guys, if there's stories you want us to cover, please let us know in the comment section. Thanks for watching, everyone.